The other point I like to make, and I was speaking about derivatives earlier, and how this LDI crisis evolved in September 2022. Who knows? There might be other derivatives that are blowing up right now, and it could be one of the reasons the Bank of England is intervening so much. Monday, March 24th, 2025, Monaco 64, home of alternative economics and contrarian views. Before I start today, I'd just like to say that I hope you had a great weekend and you have a great start to the week. But yeah, to the topic, today we're going to look at why the UK financial system is on life support. Yeah. I've looked into this in the last few days, and it's worrying. And the Bank of England, the short-term repo operations, has surged in the last 12 months. And we're going to look at what that means, what short-term repos mean. They're not complicated, even though they do sound complicated. That's the way these people operate. They make their terminology really complicated so that the general public doesn't look into it. The general public remains completely asleep. But I would say that the crisis of September 2022 is, was just the beginning. And what we're seeing now is much bigger and worrying. So we're also going to look at how that could affect your finances and also the currency, I would say, the currency that we have to use every day to buy goods and services. Before we do, I'd like to give a shout out to one of my affiliates, Dirty Men Safe. Well, what is Dirty Men Safe? Well, it's underground safe solutions to store your valuables like gold, silver, coins and bars, documents, and even if you are into cryptocurrencies, your crypto wallets. It's very convenient. It's hidden protection and instant access. So if you want to find out more about Dirty Men Safe, there's a link below in the description. And if you do decide to get one, there's a 10% discount and a special gift that they'll send you. They will ship to Europe as well as the US. So one of the playlists I have on my channel is derivatives, everything about derivatives and how they work. I worked in the derivatives market when I was in the financial sector in the city of London. The derivatives that I worked in, exchange traded derivatives or futures and options that were traded in an exchange, is relatively regulated. The market information is published publicly, so people know what's going on. But there's another kind of derivatives that is out there, and the notional amount of those derivatives traded are they mushroom the other kind, the exchange traded, and they're called over-the-counter derivatives. And derivatives are basically side bets on an asset class or investment holding on, let's say, a currency, bonds, stocks, any kind of bet, like a forward bet, options. And the thing about derivatives that makes them really dangerous is that it's always leveraged and it's also off balance sheet. So no one really knows what's going on, especially in the OTC market. And that's what led to the crisis back in September of 2022 here in the UK. The defined benefit private pension system almost collapsed, which would have decimated wealthy baby boomers' savings completely. They would have become dependent on the state pension, which doesn't really pay much every month. And that happened, of course, because a lot of the pension funds, the insurance companies, they think that bonds are safe, especially government bonds called gilts here in the UK. But what happened from let's say 2021 to 2022, as prices started rising and the CPI or inflation went into double digits, the central banks had to raise rates really aggressively, and bond yields went from like 1 or 2% all the way to 5. And existing bonds, when their yields go up like that, their prices have to adjust lower so they can compete with the new bonds that are paying 5%. So that's why the price of bonds drop when yields rise. And the problem is a lot of these private pension funds and insurance companies, they hold a lot of this stuff, and they still do. So their balance sheets went totally, kaput or almost bankrupt. And the other thing they'd been doing, because interest rates had been low for over a decade, they'd been leveraging in order to get higher returns. They're only getting 1 or 2% from their gilt or bond investments. And when it flipped, when rates started going up, everything imploded. And that's when the Bank of England had to come in and do not QE. They had to bail out the whole defined benefit pension sector in the UK at the expense of the taxpayer. Not that they taxed people to do that, but the expense was the debasement of the currency. And we've seen gold. I think at the time gold was £1,400 an ounce, and now we're at 2,300. So that has been the effect. Yes, they've been talking recently. You've seen the mainstream press. FTSE makes all-time highs, but if you compare the FTSE to the price of gold, and I've got a chart for you here, you can see that it's all an illusion, right? So what's the current crisis, though? Well, the Bank of England, I think, started a repo facility. And what is a repo facility? Well, let's say pension fund X has problems and they need the cash because their gilts are not worth as much. They'll lend the gilts at par to the Bank of England. The Bank of England will give them the cash overnight or for a week, and they keep doing that to keep the market liquefied. And that's basically what a repo is. And then actually the pension funds sell it to the Bank of England. It's like lending it to them, and they get the cash, and then they buy it back, and the Bank of England makes a little profit, of course. And that's what happens. This was supposed, these short-term repo operations originally are just for banking institutions like the big banks, but now they've included financial institutions, or the shadow banking as it's called, fund managers, pension fund managers, insurance companies. So what's been happening, and we're going to look at it right now, is this. And this chart here is proof that the system is bleeding out and there's something wrong. So this is a chart of these repo operations at the Bank of England. So Bank of England short-term repo, and it's in billions of pounds. And I've looked at the numbers. About a year ago, at 21st of March, it was just around 3,000 million or 3 billion. And it's really taken off, as you can see. And we are now above 60 billion, which is huge. I know in terms of the US, it's not big, but the UK economy, of course, is a lot smaller. So, yes, I've got some data that you can find on the Bank of England website, and I can tell you exactly how much it's gone up. So 21st of, let's have a look, 21st of March 2024, it was at 3,530 million or 3.53 billion. And the latest numbers, 20th of March, so last week, it was at 62.5 billion. So I've done a little bit of calculation here. It's not hard. It's gone up 1,670%. So basically, the Bank of England is doing really kind of QE. Technically, it isn't QE, and that's why they have all these different terminologies to keep you blind and not knowing what's going on. So what this means to your investments, if you have private pensions or if you have insurance policies, it means that, unfortunately, these companies that manage your finances, they're in really big trouble. And if it weren't for the Bank of England, all hell would be breaking loose. So am I telling you to take your money out of these institutions? No, because I think the Bank of England and the government will not allow these institutions to fail, or maybe they'll allow the smaller ones. But what it means as well is that, in my opinion, you have to try to keep some of your savings, and there are, of course, inducements for you to put your savings into a private pension. They give you some kind of sweetener, but even that, I'm not sure if it's going to continue with the Labour government. But what's going to happen and going to keep happening is the debasement of the currency, because the Bank of England is just creating more and more liquidity. And that's why the inflation that they talk to us about, CPI and RPI, doesn't seem to want to go down, because the Bank of England is injecting more and more liquidity. They can't allow things to get out of control. And the other point I like to make, and I was speaking about derivatives earlier, and how this LDI crisis evolved in September 2022. Who knows? There might be other derivatives that are blowing up right now, and it could be one of the reasons the Bank of England is intervening so much. And I wanted to show you here the chart, the most important chart that you have to keep an eye on. It's the UK gilts, 10-year gilt yield. So as I said to you, gilt yields were, below 1% up until the end of 2021. Well, even in the beginning of 22, they got down to like 0.7%. And that's why these pension funds had to leverage through LDI, through the derivative, because they're getting nothing for their members. They promised them, like, I think 8%. I think that's what they told me when I got my private pension in the 90s. Eventually you have a pot of capital and you're going to get 8% a year. So you can understand why they were leveraging. But then all of a sudden, in the beginning of 2022, the 10-year yields just started going up massively. By June 2022, it had gotten up to 2.7, which is still relatively low compared to where we're now. Then it dropped back to like 1.7. And then from August onwards, it just started taking off. I think the mini budget, the Liz Truss mini budget, was in the beginning of September. So you could argue this crisis had been brewing since the beginning of 2022. And then it culminated, of course, when the 10-year yield got up to around 4.7% in yield. Bank of England had to come in. And they've been able to keep these yields pretty steady. I mean, between 3.5 and 4.5 for the last 2.5 years. But as you look here, beginning of 2024, they had gone down back to around 3.5, but they've been in an upward trend ever since. And that's why I think the Bank of England has massively increased these short-term repurchase operations with these financial institutions. And we've had some kind of slack since the beginning of the year. The 10-year got up to almost 5%. It dropped, but now it seems to be picking back up. So the higher that 10-year gilt yield chart goes, the worse it's going to be. The more you can bet, the more repo operations the Bank of England is going to make, the more liquidity is going to flow into the system. Do I think they can keep things patched up? I think they'll do their best. But the flip side of it will be a continued debasement of the pound. And when I say that, I don't mean like the pound going down against the dollar, even though I think it will again, but going down against real money or gold. Yeah, so I think if we break 5% in the 10-year, and it's not going to be this, might not be this week or next month, but this year, I think we're still going to get to that level. Things could get very interesting in the financial sector. And yes, they're going to keep pumping the system. They might even have to come out and start doing QE, which is slightly different than the repos. Repos are just short-term weekly operations, which renew anyway. It's almost like a QE. So there you go. Aside from being aware that's going on, and I think that's a good thing, what can you do to protect yourself? Well, as I said, try to keep some of your savings out of the whole system, not even premium bonds. Think about getting some sovereigns, gold sovereigns or gold Britannias, or even some silver coins, Britannias, coins of the realm. I'm not telling you to do that, but it's what I've been doing, and it's paid off. It does what it says on the tin. It protects the purchasing power of your savings, and I think it's going to get worse because we haven't seen the last of this. And I don't want to keep pushing affiliates, but if you do want to get gold and silver, not just here in the UK, but in the US, I've got some affiliates below in the description, and they're very reputable dealers. They've been in business for at least 30 years, both of them. So let's quickly look at where the markets are this morning. It's 8:11 a.m. London time. So we've got spot gold at 3,025. The high has been 29 and the low has been 13. So last week was the first time ever that gold settled the week above 3,000. So things are still really positive for gold. Of course, it doesn't go up in a straight line, but the trend is nowhere but up, in my opinion. Silver, silver's up 20 cents or 0.5%, 33.21. High's been 25 and the low has been 32.93. We're seeing the stock market indices go up quite a bit overnight. The Dow is up 350 points or 0.85%. NASDAQ 100 is up 1.3%, and the S&P is up 1%. I think the stock market is becoming much more of a sell the rally kind of deal, not buy the dips. So yeah, I'm not too positive about the general stock market. What about the currencies? Well, the pound is up 0.25%, and so is the euro versus the dollar. The dollar's up versus the yen 0.25% as well. Swiss franc is the dollar's pretty much unchanged against the Swiss franc. General commodities, we're seeing crude, WTI crude, trade back towards 70. It's now at 68.50, up about 20 cents. High grade copper is up 1.4% at 520. I suspect that could be an all-time high for copper. Yep, all-time high. So that's saying that we're not going to see deflation, people. We're going to continue to see debasement of the currency. And yeah, so that's it. Keep an eye on those gilt yields. They're very important. Don't just listen to mainstream media and keep track of the FTSE. That's a distraction. And if you do want to look at the gilt yield, I'm going to put a link below in the description of where you can keep track of it. So with that, I'm going to wish you all a very good day. Take care. Bye.